Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the Market Site studio, we have Phil Mackintosh, chief economist at Nasdaq. We're going to catch up on quite a number of things as it relates to macro and the economy. Phil, it's great to see you. As always, it's been, I think, since the end of September, beginning of October, as you and I, our travel schedules have picked up again. And despite the conversation around a weakening economy and inflation at the levels that it's at right now, I don't think I've ever seen the airports, restaurants, stores even busier than they were pre-COVID.
I mean, it's kind of why we're starting to get a little bit of coalescing around the whole soft landing idea, is even with inflation as high as it is, and even with markets falling, and even with the property sector very weak, there's still a lot of spending. There's record prices in a lot of the airlines. You've got a lot of spending in restaurants completely back to where it was, Broadway's back to where it was. So yeah, there's a lot of spending in the system, and there's still a lot of money on the sidelines too. So I think anyone that's looking at these recession indicators and the fact that we have interest rates inverted kind of has to do a double check, because there's still a lot of stimulus money in the system, and a lot of people still feel pretty comfortable about their outlook, especially with unemployment as low as it is. Plenty of jobs as well.
I'm curious to see how it plays out in the first quarter, though, because there is a lot of pent-up demand and people can finally see their families a gift again, right? Again, the stores being so busy, then of course what we're seeing happening with e-commerce, but when it comes time to pay those bills, especially with buy now, pay later, and then, you know, what's been accumulated on credit cards and so forth, and the consumer's been such a key part of this economy that I think it really does hinge on how that plays out in the first and second quarters.
Yeah, and there's definitely an uptick in some of the credit card spending, especially in the lower income group of earners. So we're starting to see some normalization, I guess you could say, where people have run out of some of their COVID savings and are starting to use credit cards again. So eventually that will put a handbrake on sales, especially if prices stay as high as they are. The other thing that we might see is if we don't spend enough at Christmas, there's a lot of data that says inventories have regrown to above COVID levels. And so we might actually end up with some discounting, which would be good for inflation.
That is right. It would be good for inflation. I want to switch gears a bit and talk about market structure, one of your favorite topics. In terms of retail trading trends, are you starting to see the retail trader come back into the market a bit, or is that volume still on the decline?
So what's been really interesting is market-wide, we have every day sort of 11, 12 billion shares trading in the whole market. It used to be 7. So since we sort of started COVID, we've had this total upshift that seems to be holding. And the retail activity as a percentage of that has actually grown and stayed high. So if anything, retail is more persistent now as the institutions are starting to sort of slow down, worrying about, you know, to your point, the news cycle's slowed down a little bit. So it looks like institutions have like pivoted to value and just stuck there for a bit. But retail is still pretty active. What we have seen that's interesting is the last 3 months, they've started to become net sellers of stocks, especially in the tech sector. They've been selling healthcare a little bit pretty much all year, but the last 3 months, they had been pretty consistently buying stocks all the way through COVID, and now they've started to sell stocks. Not as much as the ETFs they're buying, so they're still net investing in the market, but they're picking their spots and selling stocks in the last few months.
Yeah, well, I guess with rates going up, that they're going to start to look at more fixed income ETFs as an example. I know with strategists we've spoken to a lot, moving into the dividend payers or looking for ETFs that are, you know, have a lot of cash and they pay dividends and they grow their dividends.
Yeah, dividend stocks, dividend ETFs have done quite well. Quality ETFs have done quite well. So those sorts of portfolio constructions are definitely making sense. And there was some data coming out recently that shows international investors are starting to buy treasuries and sell stocks. So the whole TINA trade, there's no alternative to equities, that was happening when interest rates were so low, has now started to unwind. And people are looking at our 3.5%, 4% 10-year treasury rates and thinking that's okay.
Well, I mean, think about it. If you got your mortgage under 3%, right, you could actually be earning more on your fixed income
deposits.
Instruments or in your deposits. And well, it would be nice if you still have your down payment so you could pay your interest with that. But I mean, I can't recall a scenario where they were that low when you got your mortgage and now savings rates are higher.
Yeah, there's been very few times in the last sort of 70 or 80 years where the Fed has jacked rates up quite as quickly as it has this cycle. It's probably the third fastest. There was back in the 70s and 80s when we had runaway inflation. They moved rates up more quickly, but this has been a really rapid change, to your point, in rates, and from almost zero to sort of 3.5%, 4%. So a massive change to our budgets and our cash flows, and especially the housing sector looks like it's hurting. The prices of houses have just started to come down, but the sales levels have been very weak for a long time. Just no one's applying for a mortgage because no one thinks they can afford a new house.
Well, it feels like there's no inventory either. Like, I love looking on Zillow, it's my guilty pleasure, and it just feels like there are less listings.
Yeah, so no one wants to sell at a low price and no one wants to buy at the high price.
Right.
So, yeah, there's a little bit of a dislocation at the moment because of that.
Appreciate the insight. As always, it was great to see you at MarketSite, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.